Welcome to Franchise Focus. I'm your host, Lisa Lenkowski, and I'm the owner of Milestone Franchising. And Franchise Focus is all about speaking with experts in the franchise industry. And today we have Michael Reeder, who is a CPA and the managing shareholder of Swartz Reeder out in Chicago. And it's Swartz Reeder Advisors in the Chicago area. Welcome, Michael.
Thank you for having me, Lisa. It's a pleasure to be here.
Yes, I'm very excited to talk to you because you saved me and my client when we needed you most. So I said, I have to get you on this show. So Michael, can you just explain a little bit about your background and how you came into being a managing shareholder with Swartz Reeder, and we'll talk about what you do and all of that good stuff.
Absolutely. So once again, Lisa, thank you so much for having me. So I am the managing shareholder of Swartz Reeder Advisors. I now own the CPA firm that hired me out of college, 35 years old. And Swartz Reeder Advisors is a CPA firm for small businesses and individuals. And we have a niche in the franchise industry and working with business buyers. And this niche started out when I first became a partner. It was Swartz Financial Management Inc., and now it's Swartz Reeder. My mentor Barry Swartz, he's still working full time. When I first became a partner in 2014 and 2015, we acquired two smaller CPA firms in the greater Chicago area and merged them into our book of business. And one of the clients that we acquired was a self-employed franchise consultant, and that was the first time that I ever heard of what a franchise consultant is. So here I am at that time, I'm 28, 29 years old, and I just bought a couple businesses myself, albeit not franchise businesses, but I just bought a couple businesses myself. So I have that firsthand experience of what it's like to buy a business. And I just got this tax client who's in the business of helping people buy businesses, franchise businesses. So I thought that this was all really cool. And so I told my one buddy about it back then, and he was looking to do something out of corporate. He was looking to leave corporate and to do something self-employed. So I told him about this, and so he joined the Franchise Broker Association back in 2015. And so when he joined the Franchise Broker Association back then, he would start working with candidates, and his candidates would have questions about accounting, tax, entity structure, funding, et cetera. And he didn't know how to answer them because he's not a CPA. And so he reached out to me, his CPA buddy, and said, hey, Mike, would you answer these questions for my candidates? And who knows, maybe they'd become clients of yours. So that is the genesis story of how me as a CPA got into the franchise world. And I still do that same thing, Lisa. It's just been snowballing the past 6 or 7 years in the most positive way. Word got out at the Franchise Broker Association about what I was doing with my buddies' candidates, and so I quickly became the affiliate CPA of the Franchise Broker Association since 2015, and more recently over the last few years, I've cultivated relationships with consultants that are with IFPG, FCC, the U Network, FranNet, FranServe, FranChoice, the Entrepreneur Source. I have a nationwide network of franchise professionals, whether they are franchise consultants, franchisors, franchise funding companies, or franchisor development groups. They refer me their prospective buying candidates, and me as a CPA, I provide the buying candidates as 60 minutes of complimentary CPA consultation time to discuss any questions they have in the context of accounting, tax, entity structure, funding, financial projections, resale, financial statement due diligence if it's a resale, and then items 7, 19, and 21 of the FDD as it pertains to their prospective franchise investment. And then if they want to work with me in a paid context, that's always a conversation I can have with them at their convenience. And if not, because they prefer their local CPA or whatever it is, my feelings aren't hurt. So that's my process. That's what I've been doing for the last 6 or 7 years as I've cultivated this niche and in the franchise industry, working with business buyers. And Lisa, I'm having so much fun doing it.
I'll bet you are. And thank goodness that you do what you do, because I had a candidate right at the close of 2021 that was looking at purchasing multiple units, and she wanted someone to do a 3-year projection. And I couldn't find anyone that would do this. And they didn't even know what, a lot of CPAs didn't even know what a franchise disclosure document is. And they didn't understand, that she was looking at doing what's called a Rob's rollover with her 401k. And it was all just really crazy. And it was the end of the year, and she's looking to do this. And then lo and behold, I was referred to you, and you met with her and you explained everything. And not only did you explain everything, but you told her that the entity that she was looking to go into was not the right one for her. So you not only did this 3-year projection, which I tell my candidates, the more that you can come into this on solid footing, on solid ground, knowing that you're making as good of a decision as possible, the better business owner you're going to be. So check, you were able to do that for her. Then as far as making what your entity is going to be for your company, is it going to be an S Corp? Is it going to be an LLC? That's another really important discussion to have. Do you want to talk about that?
Yeah, and do we have like 5 hours, Lisa? Because I can go for like 5 hours.
No, but I'm going to have you back so we can have more discussion.
So, yeah, and so like I'm just a fast talking Chicago boy, so there's just so much to unpack here. But yeah, I mean, the main topics discussed on the complimentary CPA consultation calls are entity structure and funding strategy. Now, I am not a lender, I am not a funder, but I am a great strategist when it comes to entity structure and funding. And so a lot of my referral partners have me talk to their candidates to determine, okay, what should we structure this entity as? How should we fund this investment? And then they go to the funders out there. And so I always get context on 3 buckets when it comes to entity structure and funding, right? So bucket number 1 is what's the investment. Bucket number 2 is what's the allocation of assets on the personal financial statement of the candidate. And bucket number 3 is what is the candidate's household income and expense situation. And all of those 3 buckets are attached at the hip, and they're all unique to the candidate that I'm talking to. And they drive, all 3 of them attached at the hip, drive the entity structure and funding conversation. I may talk to someone who, after getting context on all 3 of their buckets, an LLC taxed as a partnership or an S corporation funded with an SBA loan makes the most sense. I might talk to another candidate where after getting context on all 3 of the buckets, the Rob C Corp makes the most sense. And so everyone's situation is different, and not everyone is painted with one broad brushstroke. The investment, like for just quick example, if you have an investment that is going to require brick and mortar retail build out, then that alone right there implies that there is going to be a lot of accelerated depreciation of fixed assets, whether it's furniture, equipment, leasehold improvements. And so that means that there's going to be more of a tax loss in year 1 and likely year 2 as well for tax purposes. And then when I ask for context on the investment, like that matters because that accelerated depreciation, and this is just one example. That's why I said we don't have 5 hours. When I hear that, then that's gonna, I write everything down as I'm talking to someone in my handy dandy notebook, and I'm taking notes on everything. And so that's that's an important factor, right? And then if that same candidate, for example, they're either keeping their corporate job where they're making 6 figures, or their spouse is working, making 6 figures, even less than, but 100,000 or 600,000, right? So in that context right there, if that is, and then whatever their assets are in the personal financial statement, that's important. But just in those 2 things right there, where my head starts going as a CPA is, okay, well, let's see. If they were to structure as an LLC, they're going to have a big loss those first couple of years, and their individual tax return has this big income on it from the corporate job. So that if that loss were to flow through to the individual tax return, they're going to get a lot of money back in their federal and then depending on what state they're in, their federal and their state withholding. And so that is something that other people that are, franchise consultants are not expected to know that. Franchise consultants are not CPAs, right?
Correct.
The people working at the funding companies are not expected to know that. They are not CPAs. And so, and then that's really, and so me as a CPA in this industry, that's where I'm that's the type of deep dive that I'm doing on these calls. And then also sometimes, and then everyone's different, right? Like there are people that they hate taking on debt. Like the word debt scares them. Right. And they would rather bet on themselves and put their retirement assets at risk. There are other people that would rather put their retirement assets at risk and I'm sorry, there are people that would rather preserve their retirement nest egg and leverage third-party debt. And so, depending on and that's a big, and Rob's C Corp, and that's a whole another episode for another day, right? There's so much to unpack there. But a Rob C Corp is a C corporation that's owned by the retirement plan of a C corporation, and it's a way for candidates to invest their retirement money into their own business, tax and penalty free. And there are pros and cons that come along with it, but that really makes sense a lot when. And not it doesn't this is the only way, but I really like Rob's a lot when the candidate can do it and afford to take nothing out of it on day one. But it comes with certain downsides that I tend to unpack a lot. I weigh the pros and cons of everything, of every situation, pros and cons of Rob's, pros and cons of LLC, pros and cons of SBA loan, et cetera, et cetera, et cetera. And what nets positive for the candidate after weighing all those different facts and circumstances is the route that we go with. So I'm really on an island. I'm really on an island by myself out here, providing this type of value in the franchising business resale world as a CPA.
Right. And wow, you're right. This is so much to unpack. And it can get very complicated, but it's such an incredibly important discussion for people to have and for them to understand, especially when you're looking at those multiple units. If you've got one unit and you're getting the express loan for an SBA, that's not as daunting. But once you start entering into these multiple units and trying to figure out what avenue is going to be the best from a financial standpoint overall, not just for today, but going forward through the life of that contract, that 10-year possible contract of your franchise, these are all the reasons why you want to talk to a franchise CPA. Just like I tell people, you want to talk to a franchise attorney. You're not going to take a franchise disclosure document to an attorney that does, estate sales or they do divorce, because they don't know what this document is, and they're going to start redlining it all over the place because they don't understand what any of it means. So when I talk to a CPA and they go, oh yeah, I can absolutely help your candidate, and then I say, well, how much experience do you have with an item 7 and an item 19? And I get crickets. Then I go, okay, I need someone that has this expertise. So you have found a fantastic business for sure. So we're going to take a really quick break, Michael. And on the other side, we're going to dive even deeper into the CPA world and how it meshes with franchising right after a word from our sponsors.
Our new home. Lots of windows, great light.
But the birds. They're back.
Yes, I hear them.
Uh-oh. Why are these birds so angry?
At least Geico makes bundling our home and car insurance easy.
We save a lot.
I'm going. Ah!
Hurry!
I know.
For bundling made easy, go to geico.com.
Welcome. I'm Barry Lefkowitz. I'm your host on New Perspectives on RVN TV. I come to you each week with issues and topics that you will generally find in the news. And if you're looking to be able to get caught up and know what's going on, then New Perspectives is the show for you on RVN TV. Look forward to having you.
Your mom's gotta go.
Oh, she's family.
Like daughter, like mother.
Well, what is that supposed to mean?
She's using my Old Spice moisturizer with shea butter for impossibly smooth skin, and she's wearing my robe. It's bad enough you use up all my body wash, and now her.
We're out. Nice robe.
Thanks, Mom. Thank you. You got good taste. That's your mama.
Welcome back to Franchise Focus. I'm your host, Lisa Linkowski, and I am sitting here today speaking with Michael Reeder, who is the shareholder, the managing shareholder for Swartz and Reeder Advisors in Chicago, Illinois. And what I would like to talk to you about, Michael, next is there's a lot of instability in the economy right now. You know, we all know we've got inflation woes, we've got concerns about a recession, we have the supply chain still being an issue. But from a CPA standpoint, what can you say about this instability, and what words of maybe comfort, hopefully you have some, for people that are considering owning a business at this time?
Yeah, absolutely. So, I mean, this is Mike, the business owner and advisor, more than Mike, the CPA, that's going to respond, because, you know, CPA, people think taxes, and that's an important part of everything. But, you know, I'm a business owner just like you, Lisa, just like everyone here in the audience. And I'm an advisor to hundreds of business owners across the country. And just, you know, and we're a CPA firm in Chicago, but we're really a virtual CPA firm. We have clients all over the country. And I go back and forth, actually living in Chicago and Maine. So we're really a virtual CPA firm. But to answer your question, Lisa, I mean, for me, I always there are pros and cons to everything. There are pros and cons to being a franchise business owner. There are pros and cons to being a corporate employee. There are pros and cons to being an independent business owner. And, you know, there are pros and cons to starting a business from scratch. Ramping up from zero. There are pros and cons to investing in a resale business. And so when we are in this turbulent economy, when one of the cons of being a corporate employee is you don't have control of your destiny. You could be doing everything right, and the bigwigs at the top need to make some budget cuts to keep the shareholders happy, and you're gone. And that happens a lot. You know, ageism is real. You know, if you're in your 50s and above, you know, and you're making six figures, you know, you are on the income statement, and, you know, the shareholders are looking for ways to cut costs, and they, you know, are they going to offshore that job? Are they going to, you know, replace it with a robot? You know, and so being your own business owner, it's not rainbows and butterflies all the time. And you're gonna work hard, especially if you're owner operator. But you have, you know, you're doing it for yourself. You're doing it for yourself. And so, you know, putting in those long hours, doing it for yourself. There's something, you know, for me, I mean, that's so gratifying for me as a business owner. Like I'll grind out, you know, 12, 15-hour days, not every day. But I will grind, you know, but I'm doing it for myself. It's just really dignifying. And so you have, and like fear is a great motivator, right? So like, just like if you're new in business and you just started out and you are ramping up and you've got a loan payment, or you just rolled over a bunch of your retirement money and you just paid this franchise fee and expenses are going out the door and revenue hasn't come in yet, that's scary, right? And just because it's scary doesn't, and that's a normal feeling of being scared. And fear is a great motivating factor. That's going to wake you up the next day, and it's going to motivate you to ramp up your business as fast as possible. And so a ramp up phase is not easy, but it can, you can get through it, right? And then so just being in control of your destiny. You know, I've been self-employed since the age of 28. I'm 35 now, and I can never go back. I will do whatever I have to do to never have to, to have someone who is my boss who is not me. And so, because that's a lifestyle, right? We all love to make money, and money, like 100%. But like being a business owner is a big lifestyle thing. And like when you're in a turbulent economy and you're and people in your network, friends, family, peers, et cetera, they're getting laid off and stuff like that. But you are putting food on the table because you have your own business. You don't have to worry about getting laid off. It's such a gratifying feeling. And now let me put my CPA hat back on, right? And then so the Internal Revenue Code is written for the self-employed. The Internal Revenue Code is written for the self-employed. So you get to legally write off so many expenses as a business owner that if you're coming out of pocket on business expenses, if you're a corporate W-2, you can't write off. That you have so much more flexibility with what you can do as a business owner in terms of legitimately putting family members on the payroll if you have a spouse or a teenage-year-old kid or above, like work, like helping you out with office or like office or marketing tasks for your business. You have a lot more flexibility with making maximum contributions to a self-employed retirement plan. There are so many things that you can do from a tax perspective when you're self-employed compared to when you are a corporate employee. So I know that I just threw a lot at, but like in a turbulent economy, for the individual, right? Like you have to weigh the pros and cons of everything, of all those different scenarios: corporate employee, business owner, franchise, independent, et cetera, and explore the franchise route has a lot of benefits, and you're investing into an already proven system and follow the playbook and execute it. You benefit by being self-employed in the eyes of the IRS. And you get to build something that is yourself, and you get to build something that is yours, and build something that has a resale value for when you want to have an exit one day. Right. So I mean, there's always risk. There's always risk.
There always is.
But it can be done. It can be done.
Absolutely, 100%. And thank you for all of what you just said. And for the audience, it is. And you, right now, we know what's there. But just like what the pandemic taught us, we don't know what's around the corner. We don't know what's 6 months from now. We don't know what is a year from now. And as business owners, you have to understand that that is the nature of being a business owner, that you just don't know what's there. And there is a lack of control, but you know that you've got to sit there and work through it and figure out how to get to the other side. And, and just like you, I just said yesterday, I was talking to a group of entrepreneur students, and I said, I can never go back, ever. I can never go back to corporate America unless it was like literally there was no other option. This is the route that I'm in, and forevermore, because it's just what I've been doing for the past 8 years. So another question I would like to be able to ask you in the time that we have is mistakes that you see that franchise candidates are coming to you. What are some of the maybe 3 common mistakes that they're making when they're coming to you and they're looking at evaluating a franchise concept?
Absolutely. So now let's remember, audience, franchise businesses are a subsect of just businesses. Like you're a business owner, you either own an independent business or you own a franchise business, right? So what does franchise mean? That means that you are investing in a proven system. So you're paying a franchise fee that gives you the right to operate the franchisor's brand in a territory for X amount of years. And then you're paying ongoing royalty, and so you're bound to a franchise agreement. And so, other than, so there are, so like that's what makes a franchise different from an independent business. Right? But at the end of the day, you as a franchisee, you are a business owner, okay? Whether you're independent or franchise. And one mistake that so many business owners make out the gate is they don't take their bookkeeping seriously. Bookkeeping is this thing that needs to get done. It's now February, like let's say it's February, and you didn't do your books for last year, and you got to file your taxes, and so it's this thing that you have to like rush through to get there's more to bookkeeping than doing it in order to file last year's taxes. You can't, and so many, and I understand why business owners, because a lot of small business owners, they wear 5 hats, they have families, they're doing all these different things, like, during the day, and then like kind of they eat dinner, they want to hang out with their family, and they don't feel like doing their bookkeeping like before bed. I get it. And like, I understand, I have empathy for why bookkeeping falls by the wayside. But for those business owners that take bookkeeping seriously from day one, and their bookkeeping is being perpetually updated, then it makes the tax, it makes the filing last year's taxes easy, because come January, we're ready to go. Right? But you can't, if you don't know where your numbers are as a business owner, you're always going to be in this, always going to not really know where you stand. And you can't have any substantive planning conversation if your books aren't up to date and accurate. So planning, right? There's tax planning, and then there's CFO related planning, like cash flow and profitability conversations. You can't have any sort of substantive tax planning conversation, CFO conversation, if your books are all out of whack. And it's much easier. It's much easier said than done, just because I know how life happens. But that's why I really try to drill it in the head of my clients on day one. Like, let's take the bookkeeping seriously. Like, let's get this going on day one. Whoever's going to do the bookkeeping, we can, like, is my firm going to do it? Is the client going to do it? Is his or her spouse going to do it? Is a virtual assistant going to do it? Is an internal employee or an internal controller going to do it? We can figure that out. But first, let's get the bookkeeping system set up. Let's get the chart of accounts set up. Let's synchronize the bookkeeping system with the business checking account, business credit card account, business payroll processing account, POS system, CRM. Let's do a crash course on like the basics of I'm a big fan of QuickBooks Online, cloud-based bookkeeping, and so let's give the candidate like a crash course. Like, let's give the client a crash course on like certain things, so how they can pull their own reports and stuff like that. Let's do that like ASAP. And then figure out who's going to do the day-to-day bookkeeping, because bookkeeping by itself is it could be a monotonous task, and it can be like a basic thing, but it is vital, because if you don't have it, then getting last year's taxes is always this headache. You can't have a tax planning conversation, and you surely can't have a profitability and cash flow conversation, because you don't know where your numbers are, because your books are 6 months behind, or you haven't even started them. So that's one huge mistake. Another thing that franchise, and then this is more of like a Lisa franchise consultant topic more than a CPA, but with my network of franchise professionals across the country, I hear it all the time. Just when candidates come in, and when you're a franchise, when you want to be a franchisee, there's a difference between that and independent, right? If you have all these great ideas and all of the maybe you should consider starting your business from scratch or investing in an independent resale, and there's nothing wrong with that.
Right.
But that's why your franchise consultant is going to tell you like what to expect as a franchisee. And so the best thing that you can do if you want to go into a franchise system as a franchisee is to keep it simple, and execute the playbook that the franchisor is providing you, and just execute it. The difference between the franchisees in the top tier of the item 19 and the bottom tier of the item 19, it's not that the ones in the top are like smart, have a better IQ, than the ones at the bottom. It's just that they're executing better.
They're following the system. Follow the system and keep your books
exactly
right.
Then,
keep your books clean and know what the health of your business is. And this is the fastest 30 minutes of my week. I can tell you that one right there, Michael. We unfortunately have run out of time, but I will say that every single word that you have said is incredibly important, and I hope that people are listening at home. And I hope that furthermore that they reach out to you if they're looking to purchase a business in the franchise space. Michael is just an incredible resource, and we're putting his contact up here for you to reach out to him. And again, he is virtual and works nationwide. So from coast to coast, he is available to speak with you and do a consultation with you. So thank you so much for tuning in. And I am Lisa Lankowski, and I am the owner of Milestone Franchising. You can find out more about me at milestonefranchising.com. And Franchise Focus airs every Friday at 1 o'clock Eastern Time. And I thank you for tuning in.